Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Nvidia as they are going to be announcing earnings later this week. That earnings date is going to be November 17th, which is going to be Wednesday of this week. So I am super excited to see what they post because this is a company that I absolutely love. This is definitely one of the top companies in the market today and one that I've been watching for the better part of the past 4 years. I've really enjoyed watching their growth and development because they continue to grow at a rampant pace. Admittedly, one of my concerns with that rampant growth is what we've seen over the past month, which was largely driven by excessive call buying, similar to what we've seen with other high-flying companies, namely in the EV sector with Tesla. You can see where that growth, even just simply looking at this chart, really started back in late to mid-October, and so they have just been on an absolute tear. The reason why that worries me is because the company is now kind of getting a little over where they traditionally would be from a growth perspective, and that has me looking at some concerns with their overall valuation, where they're currently trading at 109 times price to earnings and right at about 35 times price to sales. Within both, looking at the broader industry, recognizing that they are probably the top player, it is still somewhat worrisome. So that's one of the things that I wanted to highlight here is, yes, I love the company. Yes, I am long on Nvidia, and I do think the world of them. However, I have a lot of concerns with some of their growth that they've recently gone through in terms of the overall price. Not the company itself, but the valuation of the company. As we're talking about that, keep in mind that if we are looking at the calendar and looking at their earnings and kind of what we're expecting, I think it's going to be another blowout earnings. What we saw from last year, and something that we need to highlight, is they are expecting year over year fiscal revenue to be 44% higher than where it was a year ago. So what that looks like, you can see some of the estimates here. Again, you can see previous Q3s. Estimates for EPS was right at 73 cents a share. This time the expectation is going to be $1.11. What you're seeing here is nearly 50% higher. So just to showcase that from a graphical perspective, and we can look at the income statement here from a revenue perspective. If we look at this on an annual basis, just to show the complete dominance that we're looking at from Nvidia, you can see that they've gone from 10 million in 2020 total sales to nearly 17 million in 2021. And these are fiscal years, is why you're seeing the dates displayed the way that they are. So this is going to be for Nvidia going into next year. And this quarter alone, they are expecting it to be right at 6.7 billion in total revenue, which is just, again, absolutely insane. It's super impressive and something that we'll definitely want to continue to watch. The question is, how are they going to achieve this growth? Where is that coming from? When we look at these total revenues here, the vast majority of what traditionally has been driving the historic growth was the gaming and graphics cards. And that should continue to be probably right at about half of the total revenue, maybe a little bit less than that if they hit the 6.7, 6.8 goal. But the big growth for them has come from their data center chips, as well as we're seeing significant growth in the OEM and automotive divisions. Again, a lot of this is coming from the graphics cards, the chips that they are building, and the item that is not currently baked into their overall valuation that all of this would tie into is the ARM acquisition that is currently expected to be completed in March 2022. However, that ARM acquisition, which would add significant power to the overall company, there is some speculation associated with that due to the fact that there is a lot of pressure from the United Kingdom regulatory agencies as well as the Chinese regulatory agencies that could put some downward pressure on Nvidia. All in all, this is a crazy good company and one that I am a big fan of. And one of the things that we're going to continue watching is how much higher can they go, especially in the short term. So keep in mind that the stock price was not always at this level this calendar year. They did go through a 5-to-1 or a 1-to-5 split where the stock split into 5. You can see how that growth has been just dramatic, starting again in October all the way to where we are today, going from about $200 a share to $300 a share in just over a month. What we're looking at here, and what some of this growth that you see here in the early part of November is showcasing, is the idea of the metaverse, or in the Nvidia world they call it the omniverse, where they are utilizing their platform to build out significant amounts of virtual worlds and to further develop what that looks like. And this is something that we're continuing to see growth and experience in, where a lot of companies, Facebook itself changed its name to Meta, is we're discussing how can the companies grow, how can they really take advantage of it. Well, due to the nature of the chip making, due to the processing power required, Nvidia is on the front lines of this, and as such could send the stock price higher. Again, that is one of the key catalysts. The ARM acquisition, a second key catalyst. What does that bode for the stock? My big concern is, again, the valuations. If the ARM acquisition closes, a lot of this could be closed relatively quickly. However, it is still very, very high. What I'm expecting from earnings is that they will continue to kill it. It will continue to be a solid move. However, we're going to expect and continue to see the fact that a lot of this is going to be baked into the current price, in my experience. I think that the people who wanted to buy, they were big buyers, and that already had occurred. You can see that the held by institutions is currently in place at 64.64% of the total outlying volume is currently held by institutions. One of the things that I wanted to highlight, though, is that this is from the current quarterly filing, which we don't have out right now. So when that next filing this week comes out, I will be interested to see from an overall position how much of this is still held by institutions. As a top player, I anticipate it will continue to be a very high percentage, but it'll see what percentage of this buying right here was driven by those institutional investors. So that's what we're going to be looking at. Again, I think that the current price is representative of the amazing earnings that I am expecting, but I'm just frankly not a buyer right here. If anything, I think that covered calls is an excellent opportunity for this company and a great way to maximize some of the volatility that we've seen from them. So all that being said, again, still long the company. If you want to buy in long term, I still think that that's a great company that you can do it in. Just keep in mind that we're currently trading at a PE ratio of nearly 110, when normally when we've been looking at this company, it's been in the low 70s. So that's what we're going to be looking at. With the market capitalization of $760 billion, I would not be surprised in another year to see this at $1 trillion company market cap, depending on what happens next year with rate hikes and the like. So if you find this type of content helpful, please leave a like and subscribe. It really helps the channel to grow. If you want to see what trades I'm making or ask any questions, feel free to check out the Discord in the description down below. It's free to join. And I talked about how Nvidia was my favorite, one of my top 5 companies for this calendar year. And I made that trade and that statement on January 4th. So if you have any questions, let me know. Thanks. Talk to you later.